The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 230, Nasdaq's down 69. You get the S&Ps off 24, gold's up 27. You get silver up 31. Light sweet crude's down a buck at 30.79. Bonds, you get the notes and the bonds moving. We get the notes up 23 ticks. The 30-year bonds up 1 point and 23 ticks. That 10-year, that's the one to keep an eye on, folks. That 10 years going into that low of the high, and we'll see if it can handle it. King dollar couldn't handle higher price out here today. We love being back, don't we?
Good morning, man. We are back, and the markets are rocking, that's for sure.
The markets are rocking, and we have Tiger brother Kevin Hanks with us from TD Ameritrade Think or Swim. We were out here growling and prowling. We were all growling and prowling.
It was an awesome show, man.
Wasn't it? Kevin Hanks, what's going on?
Good morning, Tom. Good morning, Tommy.
Morning, Kevin.
Talk to you guys again. It was great to see you this weekend. We had a lot of fun out there, didn't we?
We did.
That was an awesome show. A bunch of great traders, having great conversations at the booth. People really into trading. You know, not just people coming out. That was a really awesome show.
It was. It was a whole different flavor, folks, of the show. There was, and we do appreciate all the tigers and tigresses that came by the booth. And no doubt, that was really great.
A lot of volume, a lot of people, a lot of engaged people. I was really impressed.
Yeah, there's no doubt, man. And did you get home yet, or are you still making your way home, Kevin?
No, I am. I got home about 10 o'clock last night.
Awesome.
Nice.
Yeah, we did too.
Well.
You know, it's great. It's great doing those shows, but it's great coming home too, isn't it, man?
Oh, man.
Absolutely.
And we lucked out with the weather, too.
It's good to lay in your bed.
Yes.
Yeah.
Totally.
Exactly. Well, the volatility continues in the marketplace, no doubt. More opportunity, right?
10-year yield. Look what they're doing to the 10-year yield. Man.
I'll tell you, man, I'm watching this like a hawk because with 2 ticks, so, you know, what happens, folks, you know, is I felt this had to get tested because it's a high volume swing high anyway. So it's like, okay, is this going to hold? And you should see it's going back and forth between these 3 ticks. Can it blow through it? Do you know what I mean? It's 131.22 is the number, 131.20. Yeah, and so... Hey, we'll see where this shakes and bakes, but you know, I like this market, man. You know,
here's what it is, Tom. In a nutshell, in my world, here's what I'm thinking in a nutshell. If this 10-year yield is really getting down to these levels, right, you got to think about buying dips in this market,
right? And
if that 10-year yield is rallying, then you're selling rallies. But man, the market looks good down here with a 1.6 10-year yield.
It's, you know, there's no doubt. And what I, especially because what we had here, folks, is that this 10-year, you know, ran from 125 to 132 without breathing. And it's like, oh, really? Are you going to, you know, go over into 150? Well, you know, it could. We know
that's
that.
Only this year. Which is after they came out and raised the rates.
Exactly. Yeah. Just the opposite of what the correlation you think would be. You know, and so
oil's a different story today, though. Oil's got big micro news coming out, right? The API number last night, they bombed it.
Yep.
More inventories. But really, the 10-year yield is the macro story with these stocks. So
I think so.
I don't know. I think they're telling 2 different stories.
No, there's absolutely disconnects in the marketplace. And what seems to happen, Kevin, is that over the course of years, what does end up happening, they'll all connect back up again.
Sure,
you know, these things get disconnected. But guess what? I remember when I first started trading, Kevin, right? And when I was just trading equities, all we did all day long is look at what the 10-year did. We would trade equities off the 10-year. That's all we did. And believe me, folks, the 10-year then only moved like 1 or 2 or 3 ticks. They didn't move 10 ticks, you know. But that correlation
it's amazing, really. That's really one of the stories of the last 2 years is the volatility in the bond market.
Yes.
Remember when you used to go to bonds to get away from volatility?
Totally.
Not so much anymore.
And folks, just so you understand, you know what's funny too, Kevin, is that the exchanges are actually behind in the aspect of the volatility in the bonds, because you can still leverage bonds to the hilt. It's still only $1,500 for like 120,000
sure.
bonds.
What you're putting up versus what they can actually move on a daily, weekly.
Exactly. You know.
Yeah.
Pretty amazing.
Bonds have really evolved into a big trader.
There's no doubt, man. You know, so every trading day, folks, right here at TFNN, 12 to 1 Eastern Standard Time, we have swim lessons. You know, amazing program. If you trade options, folks, okay, please listen to the program, okay? It's free. It's free. I mean, give me a break.
I mean, we listen to it. It's great information.
It is great information, man.
So what are we talking about today in this wild market, Kevin?
Just perfect for this environment. Vega. Volatility trading. And strategies for long and short Vega.
I like it.
Sweet.
I like those volatility
Keep
trades.
it simple. Keep it informative.
But and we have it.
Yeah.
You know,
to say the least, right?
You get the vol in the market. There's no two ways about it.
Right.
Well, listen, man.
We're refining our tools here.
I like it.
Ready for some volatility, because guess what, folks? Volatility's not going anywhere.
And these are the days people should be watching, because you can really learn where you see the volatility and you see the markets moving. It's tough to learn when the market's just flat. And it hasn't been recently, but it's not going to stay like this forever.
Exactly.
So,
You can learn more in a day like today, folks, than you can learn in a month on a dull market.
For sure.
Yeah. Cooking, brother, we look forward to the show. Thanks so much, man.
Looking forward to it, guys.
Thanks,
okay.
Kevin.
Have
Take
a great
care,
one, man.
Bye-bye.
Have a safe one. Dow right now is down 226. You get the Nasdaq off 67. S&Ps are down 24. Tommy and I are going to be coming right back, folks. You stay right there.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow right now down 233. Get the S&Ps off 27. NASDAQ is down 68. If we go over and take a look at the E-minis first and see where this is shaking out, because ESH, I think you're going to have a nice trading day out here, man. We have the... Okay, so your first get-go, we went down, you know, if we take this from, let's say, well, we could take it from 2 o'clock this morning. It was at 1919, 2 o'clock this morning. Your last spike down on a 10-minute is 940. 940, you get 98,000 contracts. You got to 1891. You got so lower, you got to the 1888, so 3 points below it. You had the contraction of volume. Now it's going to be... You know, can the bulls do anything? Can they get a counter trend bounce going? But this is the setup. This is a nice range today. Again, you get 1919 on the top.
Oh yeah.
And so what do you? We had 30 points. We had a 30-point range.
Like 1.5%.
How cool is that?
Yeah.
Let's go to Mike in Dallas. Hey, Mike, what's going on?
How you doing, Tom? Tommy?
We're doing great, man. How you been?
Good. I hope your trip to New York was successful.
It was.
Awesome,
it was busy beyond belief.
Met a lot of good traders, a lot of good boots over there, people talking.
Right.
It was great.
Well, great. Listen, question about the England and news about them pulling out of the EU, and I'd heard something was supposed to happen this Friday. What is your take on that, and how do you think it will affect the our markets, if any?
I mean, I think they probably should pull out of the European Union. See, England, when this whole thing came down, they were so smart because they're the only ones that kept their pound. Everyone else had to convert, right? So it was like, oh, you're really going to give up your freedom? Because that's what ended up happening. They end up being like a United States. That's what it is. But they had the way the European Union is set up, they have people that run the bureaucracy that are not elected. So that gets really interesting. And inside that agreement, which I thought was bizarre, they have to agree to 100% of everything. It's like, oh my God, oh really? So if you do something. So the aspect of, you know, there'll be a battle. I mean, there'll be a political battle with them wanting to leave. But realistically, the aspect of their pound versus the euro really doesn't do a thing because they never went to the euro.
Okay.
You know?
Okay. Do you believe that England is the first of others that may decide to pull out of the EU for economic reasons?
I think Europe's getting overrun, man. So they got to figure out a lot of different things, man. Do you know what I mean?
Okay.
And that's what that's what push comes to shove with, you know.
Okay.
You know. And
I understand.
My real take is that they never, because the UK was smart enough and didn't give up their sovereignty with the pound, well, they were the smartest ones. Once you give that up, it's like, oh, really? Yeah. You know, give it to someone else, and that's what they did. And, you know, a lot of those other countries are small. I mean,
that's right.
You know,
that's
so
right.
they're like small states, you know, compared to where we are.
Yeah,
you know,
it's a good comparison.
One other question on the Nasdaq today. What do you think is going to happen on our NQ?
Let's do those NQs, baby. Let's see what we got.
We met a lot of good NQ traders.
We did.
At that show.
We did, man. Between the NQs, folks, and the oil and the gold, you know. Yeah, I mean, if you're doing spreads...
Speaking of currencies, though, there were Forex people.
Yeah, the currencies,
well.
a lot of them, yeah. If you're doing the currencies, right, I mean, the NQs right now, Mike,
I'm doing a spread.
I do the spread.
I'm doing the spreads, yeah.
This is what you have. First get-go down, 17,000 contracts at 9:30. At 9:40, we did 15,000, and then we got the test with 12. Now, what we haven't got yet, you haven't got that push higher with anything. You really, it's proved that it's contracting on the way down, but what I always like to see is that one huge spike on the way up, and then you buy the retracement. That's kind of where we are right now.
Okay. All right. Well, good. Well, thank you all very much. Glad you made it back safely.
Yeah, it's great to be back with all you guys.
Thanks for the call, Mike.
Yeah. Bye-bye.
Take care.
Have a great one. Have a safe one. Let's go over to the oil market, because the oil numbers.
Let's go over it.
The oil numbers are coming out, and also when I was listening to Larry's show, these numbers where this oil contract went this morning are some good numbers. You know, Larry was talking about it. It was coming down into, I believe he's talking about, I was taking a shower when it was happening, actually.
Multitasking.
It's
a busy morning. We got back late last night.
Exactly.
We're doing a lot this morning. I was doing the same thing.
Between the water and I had the computer going at the same time. This number, I think he was saying 3069 was the number, with 3083 right now.
When you say the number, was he looking for?
It was a Gartley coming down. I don't know where he's taking it off.
Maybe that it would go there and then bounce, or that would be the finish of the move?
That it would bounce.
Okay.
That, you know. Okay. I'm
just kidding.
Yeah.
We'll see what happens.
No, it's going to be intriguing, man.
Yeah. I mean, that's a wild range, 30 to 35. We're trading in.
It is.
I mean, look at, when you're at 30, a $5 move, talking about 17, 18%.
On oil.
Yeah, 15% up, 15% down.
Wow.
I mean, I have friends who aren't even in the market, and they're texting this morning, because I'm sure it's on whatever morning show you're talking about, especially if it's any type of business show, saying, oil up, oil down, oil down, oil up, oil down. What a wild market. And they're not even in the market. They're not even traders. And that's how pervasive that it's everywhere.
Ooh, that's good.
That was my buddy Matt, who you know, who you met in Vegas. He's not, he's texting. That's how pervasive.
So that brings the probability higher that we're getting to a low.
Yeah, I mean, it would, and you can't help but be aware of it when you fill up your car too.
Well,
so it's not even, talk about. That's the one thing that everybody is aware of for a commodity.
I agree. When I was coming home last night, we're going by the gas stations, folks, and it was late, so there's no one on the road, and it was so cool, man. I knew gas was cheap, but every one of them going by $1.57, $1.59. I'm saying to myself,
$1.60 is in my head right now, which is like,
that's pretty. That's amazing, man.
And even on the premium, which so the 93. Talking like 180, 190, which is surreal sometimes.
That is surreal. It is. That is, no doubt.
Let's take a look at gold. Can we pull up gold?
Yeah.
Because that was the one. Even this morning it was popping. It popped overnight, and then it popped again.
It popped good. And you know what's so great, folks? When we were at the workshop.
I know where you're going, totally.
I know, totally. It was great. Larry had Stan Harley on. Stan was there. There were a lot of bears in the gold market, which was perfect. Okay, it was like, oh yeah, that's the high. Okay, so this is the high, right? Yeah, that's the high. All right. We're doing 158,000 contracts right now. I was on Bloomberg Radio. What day was that? Monday, right? Or Tuesday? No, it was Monday.
That was Monday.
It was Monday, and what the argument was, they wanted a fundamental argument, and it was cool, because what happened, folks, is that when I be on there in 2002, 3, 4, the argument always was, hey, why you buying gold, Tom? Because, it doesn't pay interest. And I said, well, geez, guess what? If you have some tax, guess what? No, if you have some tax. If you have some dollars, you're getting taxed on the dollars.
Right.
Okay?
You're talking about negative interest rates now, and so guess what? When you compare it to, okay, gold didn't pay interest rates, maybe a bank did.
Right.
Well, right now, sometimes banks are paying negative, so therefore gold, comparatively, is paying, and then,
totally.
So you're always comparing assets, that's for sure.
And the way this is trading right now, I think we're going to, you stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down, and when we come back, those oil numbers are going to come. Dow's down 245, Nasdaq's off 72, S&P's down 26. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, we do appreciate you growling and prowling with us. And we're looking at this oil market. We'll get you the numbers.
I think we can tell that it means that oil's going up in price, no matter what those numbers are.
Going up.
We'll see for the last 30 seconds.
Yeah, but it's going up in price. Yeah,
just pulled back 10 cents though, and that
Yeah.
But yeah, that's quite a bar.
We're at 31.21 right now. And there's some real action out here.
I guess let's take a look at the report, and then we can kind of go through that trade that you have going on.
So, crude,
try and find,
Let's see. CLJ6. Okay, so let's see.
So we got crude
down here
with 3502 thousand barrels. Median estimate was 3250. That's pretty close. This is where there's just so many numbers that come out at the same time.
Demand rose, so maybe it's the demand. Demand rose 373,000 barrels. Imports fell 314,000 barrels.
Yeah, they'll just keep coming. Oof, look at that.
It spiked and came all the way back. Okay, so
there's a 50-cent spike up and spike down.
Right. So we spiked to 31.30. Right now we're at 30.95. The trade that Tom was talking about. Now, if you haven't test drove the Nadex product, folks, okay, Nadex is, to me, is absolutely, if you're going to trade news on the oil in general.
Trades like this, I really like. That's why I was like, we should go over this because I like how you set it up. I like you had some orders already in there to sell them, maybe
I did.
for half a position.
Maybe we sold them. We'll find out.
It was close. I don't think it got there. I was taking a peek on it.
Okay.
Yeah, it's still
there.
Riding.
Okay. So gold, oil. I like trading the NDX one all the time.
Yeah.
Those ones there, folks. The defined risk is so cool for what you're putting up versus what you can lose.
Yeah, defined risk on the bottom side, you know, and you still have massive potential on the upside. You will end up paying some premium when you have a massive risk reward. But I mean, in this trade, and we'll go over it, you were getting almost 10 to 1 on a massive route. Now, oil would have to move $5 today, but guess what? We've seen $3 moves real easy.
And I've got 275 moves on the same type of trade.
I mean, we just got 50 cents up and 50 cents down in like 3 minutes.
Right.
So that's not out of the realm. So you were in a 31 to 36 spread, right?
Yep.
It was trading at 30.90, so just near just so everyone understands, it's even below the spread.
That's
going to expire completely worthless unless it ticks above 31.
And that's the big risk.
Yeah, because you're paying premium in that the market can just stay flat.
It was all premium.
And you lose your entire investment.
Right.
But to go over it, this is the trade that you were looking at, and what's great is the market's literally right at where it was when you got in. So your trade, you got in at 31.42. You're buying, you're looking for it to go up, and you're risking $42, which is the 31.42, the 42 cents. It's $1 per penny, basically.
Right.
And your max profit is $4.58. Now, again, that needs to go to $36 for max profit. But you can see how, you know, every dollar in oil is $100.
Right.
So, you know, and what'd you say to me? You're looking for maybe like $1.50, where 3 times what you're risking.
I'm looking for 3 times my money. Exactly.
And you still, you know, you still have that massive upside.
Oh, I still might get it.
Yeah.
You know, that's.
And so you had multiple contracts, and what did you do at the break? You put in maybe half of those, almost half of them. You said, why don't I put an order in? Because you know how they can spike.
Right.
And it was at like 31.85. So we'll see if it can creep up there.
Right.
I like the trade just in terms of, we've seen the volatility you have. It's not a massive amount of money you're at risk, and you know you're capped.
It's not. And if you trade gold, folks, I know you folks that like whether it's the nugget or the dust, it's great trading gold in this beyond belief, because what has happened in the gold market is this. It's really weird, man, because was it Tuesday I was trading gold? Was it, yeah, it was.
We were out there Monday,
it was Monday and Tuesday. So I think, no, it was Monday. Yeah, I put the contracts on Monday, and what had happened, I was paying 40 cents in the morning.
Okay.
And I was paying 40 cents, and the spread was pretty big. And
it's probably similar to this. You paid about 40 cents
It was, and I wasn't expecting the same.
Oh, yes, we had this conversation.
Side,
okay, yeah.
And then what ended up happening, so check this out, because I didn't know this, and this was really cool, because Tommy was explaining this to me when I came back to the booth. So I put that spread on at like 7:30, 8 o'clock, because it was early.
Morning? Okay.
It was early.
Yes.
And that cost me 40 cents, and I was loving that. It's like, okay, man. Then, but guess what? What ended up happening, at 11:30, because gold wasn't doing that much, right? The spread was only 40 cents.
The premium.
No, the premium.
Yeah.
I'm sorry. No, I paid $2.
Right.
That's right. I paid $2.
So just to put it in, you were trading a 1,200 to a 1,250 gold spread.
Exactly.
I remember it because it is. This is a great opportunity.
Right.
It was trading at about 12.12.
Right.
So in that instance, you have 3 times to the upside. It's very similar to this, not even quite as dramatic as this oil trade. But so normally you're going to be paying a decent amount of premium because you're only risking $12 to the bottom side you know, in the gold contract. Now you're risking more than that in the spread maybe, and you have $38 to the upside. But what was happening was it was 11:30, I think, and those were expiring at 1:30.
At 1:30.
So you only had 2 hours left.
40 cents.
So there wasn't, it wasn't even, it was barely any premium. And what I was explaining is that implied volatility, right? So there's not much premium because that spread is almost getting tightened, as in you have $12 to the upside, and realistically you're not going to get a $40 move within the final 2 hours of the day unless something catastrophic happens. So with that in mind, you're not going to be paying as much premium because it's not priced in, because the implied is that you not really have to pay for that upside, because very seldom will you ever get that upside. But it's great because it comes almost an equal trade where you're paying no premium, 12 to the upside, 12 to the downside.
Right.
Yeah.
And what happens is that I think they just sold them. Oh, not yet, huh?
You got to get 31.85. We can see the market.
Oh,
You're
good.
at
I got it.
31, 31.55 right now. Yeah.
And so the cool thing here, folks, is that, so just picture this, because if you trade gold futures, this was the setup. The setup was that I put $485 up for
probably 10 contracts.
Yeah, for 4,500 to make 4,500 on the other side.
You were trading 10 contracts. So to put it again,
it was like, you got to give me a break, man.
And if you just keep it per contract basis,
that's
it was very similar to this. You're putting up about $50 with like almost about 450, and that's because it's a $50 gold spread. And so once you get used to those levels where everything is on the basis of 10, drop the 0, add the 0, and that's where you just become comfortable with what means what. And we get some action in oil, that's for sure, man.
Yeah. So check it out. You can do it right in the front page of TFNN. Just hit it, folks.
Try that demo account and watch these news events drive everything. And whether, we met a lot of people that are just trading the binaries and doing well out there, which is interesting.
And we're going to have one of these guys on. And we saw something
Our man
really.
Butch, he's going to be coming, baby.
We saw something really intriguing, folks. I'm telling you, man. And
it is interesting going over those different methodologies, isn't it? Because it just opens your eyes to what's out there. There's so many different strategies.
Huge. Yeah. No doubt, man. Yeah. So let's see what it's doing to the marketplace, too.
Yeah,
because I suspect, as I said,
that market was popping.
I figured that oil is the one that should save the market, and we'll find out if, in fact, it is.
There we go. It's under 200.
Saving a little.
Yeah. Oh, yeah. That was 250, 260. So we get a quick 60, 70 point down.
You're down 199 right now. The comp is down 57. The S&Ps are down 20. Now what you're going to be looking for, this is pretty cool. You got to love this. Yeah, and there's the spike. That's what you needed. That's what you needed to get some action. We got wide price spread off the bottom. And you get volume. So
we'll take a look at gold when we come back again, too. Totally. That's rocking the same way.
Let's take a look at it. Do we get this is you get let's see, the S&Ps are right now down only 19. We're down 26. Yeah. Tommy and I come right back, folks. You stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So if we look at some of these oil numbers, the gasoline inventories fell 0.9%, or 2.2 million barrels.
Well, that's decent. They fell 1%. Yeah.
There's so many numbers here.
That's it. And you can see, as genius as you can be, everybody, as good of a trader as you are, there's so much information coming out on those news events that's why the spikes are up, they're down. The market's digesting that new information.
There's no doubt, man. There's no doubt. It's pretty wild.
Yeah.
Let's see, February 19th. Let's see if we can find some kind of a story on it, actually.
I know. We need somebody to break it down.
Yeah. Balance sheet.
Because at one point you have stockpiles rising to the highest level in like 86 years. But again, what's the expectation, right?
Yeah, so East Coast distillery inventories fell 248,000 barrels. West Coast crude inventories fell 2.4 million. Gulf Coast crude inventories rose 4.3 million.
Yeah.
So it's a lot easier right here where we are in the Gulf. That's Louisiana. They got to get it out of here, and probably no one's buying it out of here because there's so much oil across the country too.
And I think these, are big. Distilled fell, gasoline fell, crude fell.
Right. Jet demand fell.
So that's contracting.
Yeah. Residential demand. Look at that.
Residual. Yeah.
Wow.
Let's just take a look.
And so we're getting there. That spike just went to what, 31.60.
It's funny. Just pull it back to late in the morning, and things look wildly different, don't they? That's yesterday. That's why. Okay. But it is intriguing. And you're almost at your level. You're at 31.85. You're going to get out of like half your position.
Yeah.
So we'll see what happens.
So 3 out of the 8. I got 8 contracts right now.
I like it.
Yeah.
And you get a bounce, you know how fast it can move. Take a little money off the table.
And that's right. And what you do want to do, what I had done there, folks, okay, and I didn't get hit, but what you do want to do, if you have multiple contracts, you want to try to sell, whether it's half of them or above or below, whatever you want.
And you put it in ahead of time.
And you have to have it in ahead of time.
Just because you saw how quick that spike was in the first 2 minutes, and that could have hit that level.
No, I did. 2 weeks ago, I got the same thing. I got half of them off, and then I took the rest of them the rest of the day.
Yeah.
Let's go to Marie in Erie, Pennsylvania. Hey, Marie, what's going on?
Hi. This oil market's really intriguing.
Isn't it?
I managed to pick up some UWTI at 139, and I was trying to figure where my goal was.
Okay, let's take a look at it. So the UWTI, folks, is the Velocity 300% long position in the oil market. We take a look at this. Let's see. So put this intraday first. So this is interesting. The intraday it goes right up to the spike of yesterday first. Well, here, I'm going to transfer this. So right there, what's that, 161 to 186? What you have is this, okay? You had a nice spike, and this is, when we were talking a little bit earlier, there's been a $5 move on oil in the last 2 weeks.
Yeah.
So you have one spike, Marie, from February 12th. The bottom of that is 133. Now, it's awesome because you're at 141. The top of that is 156. So it's like, okay, so 156 is game. Now watch this. I would match that with 161. That's where the top of this range is right now.
You're looking at February 18th there.
Yes, you're right.
Yeah.
So I would go with the 156 to 161. That's what you should be able to get out of this.
Okay, I was thinking just a little over 150, but I always tend to get out too quick.
That's all right. We all do. There's nothing wrong with taking your money. This is interesting what you just said, because last night we're coming home, and because gold's running again, I remember last time that I spoke at these gold shows and people wouldn't get out, and there was a fortune to be made, and a lot of people didn't make it. Last night I'm beside a guy on the plane the way home, and he saw me. I had the Bloomberg up, and I'm going through the gold stocks. He says, I own all those stocks. I says, really? I said, how long you owe them? He says, for 9 years. I says, oh my God, right? And
wow.
So my point is, Marie, don't worry about getting out early, because guess what? Cash is, take the cash. But
yeah.
I understand what you're saying, but it's more important to always keep taking cash. You keep taking cash off the table, you're going to be all right.
Now, what do you think this gold market's going to run to?
I think this run here is going to take us like to 1400.
All that way.
Yeah.
Wow.
Yeah.
Okay.
You know, a couple of different things have happened. When gold comes off the bottom anyway, it likes to come off fast and furious. Now, this is one of the fastest moves I've ever seen outside of the first move in 2001 or 2002, folks. That's how this gold market moved. And what ended up happening is that it took about 4 or 5 months, maybe 4 months, and the whole world was bullish, right? And then bang, then it had a 50% retracement. You know, and that's what I expect these equities will do too. You know, some of these equities are up already 80%. They'll probably go up 200%, and then the whole world's going to get bullish, and then they're going to correct 100%. So it's a fast move. You know,
it's just a fast market.
It's a fast market, and there's still plenty of non-believers. There's plenty of people short. There's everything that we need for this to keep going forward. That's what you do need, you know, in order to get a market higher. You know?
Just like you were saying, you were talking about it Monday when it was at that 12-12 level. And you're saying, I love this because you're buying the retracement. And so, you know, Murray, when you're saying that, same thing. It can always pull back and you can get in there again because it was at 1250 and you were closing out trades in the gold report. And guess what? It can go up, but you're taking profit and you're saying, I love it. It's pulling back down, and 2 days later, it's back up to 1250 again. So it is a quick, wild market for sure.
Well, thanks so much.
Okay, have a great one. Have a safe one. Let's go over and look at that contract. See, this contract, folks, this is what's going to get intriguing here. If this contract lays right where it is right now, I would just, you know, I'd love to see it close right out here, because the highs are 1263 that it wants to test. We've got the 1254, and this would be, by the end of today, we're going to be pushing on volume. We've already done 176,000 contracts. That means it's going to do 200,000, 225.
For sure, yeah.
And that's what you need in order to bust it higher. And if this busts higher, this would be really bizarre, because this can be an ABC up. And if it is, if I took the most conservative one, it's 1071's A and 12. Oh my God, that's almost $200.
Yeah, like 190.
Yeah, and that'd get you to. Yeah, that'd get you to like 1392,
1380.
Right, and that gets you right where that peak is, where that longer term where it broke. Right. So, and a B2C is a straight line move. You know. So, if we go overseas and we take, I was showing Tommy a little bit earlier, Harmony Gold.
Peek back at that oil.
Oh, that's setting up good.
So
I like that setup.
There. Yeah, that's good.
Yeah.
Okay.
If you go over to, I was over in South America. I didn't
We're
travel
all over the place.
I didn't travel to South Africa last night, folks, but I was there early this morning.
You did on your Bloomberg terminal.
Because I was wanting to see how Harmony's trading. Harmony's going to be another ABC up, which is a mind blower.
I mean, that's quite a chart.
Yeah. So this is in Rand dollars. If you're watching this,
we'll pull up the Rand because we did that afterwards when we came back, because that had a big move today.
Huge.
That makes sense for sure.
You stay right there, folks. Tommy and I are coming right back. Dow right now is down 193. You get the Nasdaq off 56. Oh, watch the bonds. You're gonna get a failure. We're going higher, folks. 18 ticks. That backs down another 7 or 8 ticks before we get off. This will back all the way down. The bond market will back all the way down. But I'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and I do want to thank all our talk hosts for filling in for us. That's a beautiful thing. I was this morning, last night I was listening to Andy.
Talk about commodities, right?
Talked about commodities.
Oil,
yep.
Eggs, all the above.
Yep. And he's going to be doing a special subscriber event, folks. That's going to be next Thursday, right?
Tomorrow,
no, it's tomorrow
night.
We're Thursday already.
We just went over this at the break. The mind moved so quickly. But tomorrow night, he's doing his workshop. And he comes out with his newsletter every Thursday morning. So it's a perfect time. We always say it's perfect, but it really is a great time. You sign up, you get the newsletter delivered to you tomorrow.
Right.
To read all about it. You go to his workshop tomorrow night. You can't go. You go to the archive and talk about some movement in commodities. I mean, that's what's really cool.
And it's moving. And 6:30 to 7:30 tomorrow night.
And this is about agricultural commodities, but he's in there. He takes questions. Sign up for his newsletter. Then he's always answering emails for his subscribers. If you're a subscriber, any of our hosts, you can always email them, take care of you. And they're good anyway, but let's be real. You can't ask them every single question because they get so many emails. But if you're a subscriber, you can always ask questions, especially about what their expertise is.
Sure.
Commodities.
So you can sign up right in the front page, folks. You get his newsletter for a month. You get the subscriber event.
Can't go wrong, man.
No.
And he always does a good job. He really puts some planning into those. He's got it all worked out. He's got a big presentation. He does a good job. So it's worth checking out for sure.
We go over to this market, so let's take a look at those bonds. So what you're going to be looking for at bonds is this, folks, is that so we spiked topside. You got to 131.25. These are the notes, actually, 10-year notes, okay? Now, 131, let me get the exact number for you. I think it's 27. 131.21 it is.
Okay.
So that was the high of the low, and
of the low.
Low of the high. Yes. Thank you. The low of the high.
Just to put the low of February 11th bar, which was the high.
Right.
Just to bring,
Yeah. So we did 2.4 million contracts there. Now I suspect we're going to do less. We're at 1.5 right now. So that means we're going to do maybe like 2.2.
Okay.
So that'd be a test of that level, and the key is we close under that first. And then how far under it? Because just under it, it's like, okay, you can go right back up there. Now, if we closed under 131.09, which was the last which was a swing high of like 3 or 4 days ago.
Yep, February 19th.
That would be more bearish. That would be saying that, okay, guess what? Bonds want to pull back, and if bonds want to pull back, that means that the S&Ps want to continue doing a B to a C of, I think this is an ABC up. That's what it looks like, you know.
ABC down?
Well, no, thank you. We got
to get these terms right,
No,
man.
seriously, that's right.
So they're pretty big deals when you talk about up or down.
It is. So it's a B to a C of a large ABC down.
You're looking for a retracement within a much larger move down.
Right.
There we go.
Totally.
Perfect.
Exactly.
Perfect.
You know, if we go look at, let's go look at Rheingold, because Rheingold, I suspect, is going to be the first equity to get up and over its highs. Now,
and not to jump in, if we could jump to the Rand too, we said we were going to take a peek at that
Thank
before
you.
the
so
show ends.
here's the Rand. Rand is moving out here today.
Look at that bar today. You know, say, it's not that bad, but what do we do? I mean, it almost pulled back the entire month of February. We're right up until like January 28th, which is
right.
So that's, you know, when we talk about harmony in South Africa, yeah that's doing big business.
15.69 Rand dollars to $1 US. If we go over to the U.S. markets and we look at Harmony, oh my God. So Harmony's up another 27 cents. That's almost 10%, by the way. And it's going to do it. It's going to do an ABC up.
Yeah,
unbelievable.
That's quite a chart.
So
Can't go wrong with taking money, though.
Wow.
There's no regrets to that ever.
Yeah, 91 cents.
Because that'll pull back.
That's a dollar. That's, oh my God, that's $1.90. 230 here. It's a big one.
All right.
Thanks so much, folks. You have a great one and a safe one. Stay right there, man. Mr. Basil Chapman's coming up. Thanks, pal. Love you. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.